conversation because today we've got a very, very busy day, the busiest of the week and probably the busiest of the month, in some ways, maybe even the quarter. Today is FOMC day. We also have U.S. retail sales coming up at 8:30 New York time. And at 8:30 New York time, what we have going on is that the retail sales report is basically going to set the stage for the retail sales report is going to set the stage for what we're going to have for FOMC. The U.S. dollar is trading, I wouldn't say it's trading firmly. I mean, dollar yen is hovering at 5-year highs, and we've got a situation. It's at 5-year highs, and we've got a situation where it is not extending any higher ahead of the rate decision because everything is already priced in. And so, you know, we've got a expectation that if retail sales is very strong, then we're going to be in a situation where the dollar could give back its gains ahead of the rate decision. If the retail sales data, if the retail sales data is weak, it could give up its gains ahead of the rate decision. If it is strong, we could see that additional leg over in the beginning. I'm going to let Boris talk a little bit about what he thinks for retail sales for just a few minutes.
Boris.
Okay, hey guys. Sorry about that. So with what we have right now is, you know, the FOMC today is a two-part event. We have the 2 p.m. rate decision followed by the press conference at 2:30. So in terms of the way to trade FOMC, what we're looking at is, you know, or trade Fed day is first we're going to have the retail sales report, and whatever the retail sales report comes out, that's going to dictate. You know, whether we have profit taking into the Fed meeting or whether we have an extension. Chances are, you know, I still think the retail sales report is going to be good because job growth has been good, and also because you know, food prices, gas prices have been through the roof, and as a result of that, we are in a situation where, you know, the value of what people are buying are moving upwards. So there's a chance for an upside surprise. But January was a really good number. And that's why I think that even though January is a good number, the market's looking for a retracement in February. So that's going to set the stage and be the first move of the day. It's not going to have significant legs unless it's a huge disappointment or a huge beat. And then it's going to be a grind into FOMC. 2 o'clock is when we get the rate decision itself. 25 basis points is a given. Prior to that, I mean, even in early February, there was like a 90% chance of a 50 basis point hike by the Fed. Now, you know, there's a 100% chance of a quarter-point hike. We all know the reason why. We all know that, you know, the Russian invasion creates a lot of uncertainty for the markets, and that is a concern. And that's going to be a concern for the Fed. But the question is, you know, how much of a concern? And the dot plot is really what is going to give us the clue, because the rate decision is expected. The economic projections, inflation projections will 100% go up. No doubt about it. The GDP projections will probably go down because, you know, the uncertainty that high prices and lower equity values poses and higher interest rates poses to growth. The unemployment rate could improve. I mean, the labor market is still very, very tight. But what everyone wants to see is the dot plot, because the market is pricing in 150 basis points of tightening this year by the Fed. The dot plot was really just between 75 and 100. So there's a misalignment, and the dot plot kind of needs to move in the direction of market expectations. And if it does, that's going to be dollar positive. If it does not, it kind of hangs tight and stays steady where it is, that's a problem, because it means that many Federal Reserve officials are much more worried about growth than they are than we know. So that will be the first move. Now, in terms of the first move, you will see a knee-jerk reaction. There's no doubt that there's going to be a move off the dot plot itself. But then that move usually doesn't have too much legs, because by 215, usually we're in a bit of a stall mode. And we're in a bit of a stall mode as investors kind of look forward to wait for Powell's press conference. Powell's press conference is at 2:30 New York time. Anything that is important that he wants to say or plans to say will be said in the first 15 minutes. So after the first 15 minutes, you're going to see a lot of movement as well. And then there's the, but you have to wait till he finishes. I mean, usually, maybe it's tradable right after it. But then you have to wait till he finishes because, because questions will be asked by reporters. And in general, the most important questions that that will be asked in the first 3 questions. So that's what to keep in mind. So it's a very important day, a lot going on, and we definitely have a huge event risk. Now, I'm still bullish dollars going into the rate decision, because I think that overall with the FOMC, we are going to see them kick off the first interest rate hike since 2018. And inflation has become such a problem that even with the threat to growth, I believe they're going to plow forward. I believe that they're going to just continue to press ahead with their plans to raise interest rates. And Powell will be hawkish. That will be, and so I think the dollar is going to rally post FOMC. Euro is up today, up quite a bit. Now, asset classes are up in general because of the talk or China basically saying that they vowed to keep markets stable. So there's talk of Chinese stimulus. That is important as well. I think, overall, Euro still has a lot of risk. And, because I'm bullish dollars, I'm not necessarily overly bullish euros. Pound, I am bullish. Pound is underperforming a bit today, especially against the euro. But we are in a situation where the Bank of England is expected to raise interest rates. The only thing here is that the Bank of England is in the middle of its tightening cycle. They have raised interest rates for quite twice already. This would be the 3rd rate hike. So that's why it's less significant than for a central bank that is beginning a tightening cycle, and that's always the case. I'm neutral Aussie. Aussie is up very strongly today due to this Chinese headline. Aussie really kind of lives or dies by Chinese headlines, because when we had yesterday, Aussie was down the most because Aussie was down the most because it was vulnerable to all the stories of the lockdowns in China. But now China's coming back with a stimulus talk and is up the most. So it definitely lives or dies by Chinese headlines. But I think that overall the lockdowns is going to come back and haunt the currency. I'm bullish Canadian dollars because I think overall with a really monster jobs number, even though oil prices have fallen, CAD CPI is due today, and that's expected to be strong. And then also at the end, we have CAD retail sales later on, which is also expected to be strong as well. So we're expecting a lot of good stuff from Canada. New Zealand, neutral bullish. They've got rising COVID cases, but the economy's doing well, and they're one of the most hawkish central banks. So Kiwi's up quite a bit today, and I think that it could continue to outperform. And then last but not least, yen and Swiss franc. I'm still bullish yen and Swiss franc. I don't believe this rally in in stocks. I don't believe that we're done with, all the problems we have in the world. So I do believe that we should see the yen and Swiss franc resume its slide. Okay, so now let's take a look at the charts. I'm taking a look at the charts. Euro obviously bouncing. The resistance level to watch is 111. If it hits 111, that's a former support turn to resistance. We've got spike highs here, swing lows here. That's a place where we could really hit a brick wall in the euro. Dollar yen, obviously very, very strong. We're going to turn to the monthly charts to find any type of resistance. And you can see, we are at an inflection point. We're stopping here because it's the highs from December 2016, and it's an important level. That's 118.60 is an important level. Above there, the next stop will be 120. Dollar Swiss, we're going to look at the weekly charts. It also has resistance right around here at 94.75. A bullish dollar Swiss. I think that it could have at up to 95 cents. Pound dollar, it is rallying, rolling upwards. I like it. I think that it could hit up to this zone over here around 130, 150. The Australian dollar popping upwards. 73 cents is going to be resistance, but this is definitely a bit of a laggard, I think. Kiwi also rallying. It is finding a bit of resistance right around here at 68.10, and then probably higher up around 68.75. Last but not least, dollar CAD rolling over. We've got support at the 100 SMA at 126.80, and that's also consistent with this congestion zone here. If we drop below there, we can slide all the way down to 126.50. All right, any questions before I turn it over to Boris?
Okay, sounds good. Let me grab the screen, Kay. And show my screen. You should be able to see. Yeah, you're now seeing oil. Good morning, everybody. Good morning. Good morning. Good morning. How's everybody doing? Let's see if we got any questions here. Okay. So you guys are able to see my screen. Let's talk about what I call the war trade, because oil and gold are really the absolute true war trade instruments at this point. You saw obviously a huge spike in oil, and then we've had a massive decline for a number of reasons. Obviously, because we've had the oil completely overbought at these stratospheric levels, but also because it looks like now there's at least some progress on the peace negotiation talks. And today we're seeing a lot more positive noises coming out of Ukraine, saying that there's some possibility of creating some sort of a neutral status with security guarantees for Ukraine. That's obviously, I think, weighing on both oil and gold, which is what I really call the war trade. Gold really came off hard after the spike through the 2050. Now it's kind of, just consolidating at these levels. Now you're looking at this chart, and I kind of want to take a minute here to talk to you about the chart, because I think it's interesting to explain to you how we combine technicals and fundamentals. And this is a 4-hour chart. We do this type of trading on even a 1-minute chart. We scalp in this thing, and all of you listening to me can have absolutely free access to both Kathy's and my trading rooms if you deposit money with Eightcap. So be sure to ask your Eightcap representative about how you could get all the information and all of our trading for free. As a matter of fact, I'll be live trading today, both the New York Open and the FOMC presser, which is going to be very volatile. Hopefully, we're going to be able to make money like we always do in our trading rooms. But one of the things that we like to do is apply a lot of compressed technical analysis that tells you quite a lot in a very little space. When you're looking at this chart here, just kind of explain to you what this is all about. The orange candles are signifying RSI values of 70 or above. The blue candles are signifying RSI values of 30 or below. So it's telling you kind of overbought, oversold. But that's a very sort of simplistic way of looking at the chart, because typically when you have the big burst in RSI, it's actually the start of a trend, not necessarily the end of a trend. And we actually, if we have a fundamental overlay, in other words, if we feel there's a strong fundamental news behind the initial impulse higher, as you can see these orange candles. We're then actually going to use our proprietary bounce indicator to go with the trend. And then what we're looking for in this particular case is we get a big orange candles. We're looking for the next green candle to enter. As you can see, that's an excellent entry here. And it's actually, multi-day type of a structure until eventually it sort of exhausts itself. And after it exhausts itself, then we can start looking for possible red candles for us to enter, which is a way how we trade this, which is very unique because it gives us tremendous amount of flexibility. The chart doesn't tell you direction. The chart just expresses sentiment. That's how we view technicals. But if we can overlay a fundamental bias on it, we then have an incredible edge because the technicals tell us the right entry time for various conditions. So right now, what are the technicals telling us as far as sentiment? Clearly, that gold, for example, is pretty much grossly oversold. But we're in a condition here where we could be starting a new downtrend in gold if, and this is a critical thing, we get a couple of things working our way. The Fed actually sounds more dovish or more hawkish. So in other words, yes, they're going to raise maybe 25, but maybe Chair Powell is going to say that, we do not foresee the Ukraine conflict as a major hindrance on U.S. Policy, and therefore we're going to continue with a hawkish policy. Hawkish policy is negative gold. So if you see gold here at this around 1900 level is given, and we get a red candle on the given candle, that's going to be a very, very negative move. It's going to be a trend move for gold to the downside, and we're going to be looking to sell it further because that would just mean that this whole war spike is going to unwind very much like it has in many other cases, all the way down to the 1800 level or below. Let me, Kay, are you there? Let me just ask her to see if I can just ask her to mute her mic because I hear her mic in the background. Just one sec, I'll be right there. I just don't want to take the screen off. Oh, okay. Oh, maybe it's not Kathy then. It's maybe somebody else who's the other presenter. Okay, very good. Anyways, so that's essentially gold. Gold looks negative and in danger of breaking this 1900. That would give us an impulse to the downside. Looking at oil, similar kind of a thing on the war trade. Oil is already, you see, we have essentially RSI 30s. That's, again, as I said to you, a signal of a possible new trend to the downside. That doesn't mean it's oversold. And here, especially if we get a red candle confirming a move down, I said today, there's a couple of things going on in oil that are super interesting. We obviously have potentially some sort of a peace breaking out. If there is any kind of a ceasefire signed, the first thing Russia is going to do is dump as much oil as it can onto the marketplace because they literally are desperate for food. Within 2-3 weeks, Russia will be pretty much in lack of food mode for a lot of its population. So I think it's going to be incredibly actually negative for oil, and we could dump it higher. Add to that a very, very interesting development going on today in Iran, where Iranians released a UK citizen that they've been held hostage for quite a long time, which is clearly a diplomatic move to try to get the Iranian nuclear deal on board. If, for example, we have this kind of a situation where Iranians are brought back into the fold, and the Russians have to be desperate, dumping all their oil just to keep their economy afloat, this whole idea of oil at 130 is actually going to reverse so hard and so badly that we could see oil at 60, which is what nobody's calling for. Regardless of where it goes, we're going to use our technicals to kind of give us a clue. And to me, obviously, the fact that we may have just started a negative trend in oil is very interesting. And a break here below the 94 level right over here, this 94.990 could really, really take a lot of people out. So many people are so gung-ho biased on long oil. And this is a typical parabolic spike here that could unwind very badly to the downside if you get the fundamental drift. So the war trade could be unwinding very, very badly. And everybody who's been a hero on Twitter for the last 2 weeks is going to look like a chump very, very soon. If we get the kind of a technical confirmation, we need to be watching these levels. We start breaking 94s. I will be shorting this all the way into oblivion. So those are the war trades. Back to the risk front, taking a look at equities, which are clearly trading quite strongly this morning. I'm going to tell you, if you just look at forget all the noise and just look at the technical side of the equities look quite healthy, especially in NASDAQ. I mean, quite healthy within clearly a longer-term downtrend here. We've had a massive profit-taking move here. But the big question is, we moved from 15,000 to 13,000 on NASDAQ. This is a triple bottom here. We're kind of holding, holding a bid here. If we're in a situation where the global economy stabilizes, that's still very, very positive. The one thing that I find, at least my own analysis, to be a little bit out of consensus is inflation is horrible in the U.S. Consumer sentiment is horrible, and that means nothing because the underlying economy is actually booming. You cannot find a worker. There are so many jobs. You can literally just decide looking today and have a job tomorrow, almost in any metropolitan area of the United States, super fast. And to me, that completely trumps the inflationary pressures. Yes, consumer sentiment is horrible, but we're going to see retail sales today, and I bet you retail sales are going to be much better than anybody thinks they are, because people have tons of money and people are spending money left and right. Housing prices are going up through the roof. All of that underlying demand is really what's much more important for the economy than the inflationary pressures, which could completely deflate, as I said, if the war premium starts to go away. So we could be on the cusp of an interesting, breakout here in NASDAQ. Technically, the structure looks pretty good here. We'll have to see. I think the key tell will be if Powell is relatively relatively hawkish. Let's say yes, we're going to continue, hiking rates, and you have a knee-jerk reaction down and then a strong close up. If we get a strong close up into essentially what is a hawkish Fed, very, very bullish sign, and should be looked for a breakout in NASDAQ. 1380 obviously is the key takeout level on a closing basis here, but that kind of a reverse move down, then up and close on the highs. I mean, we're 1.5% higher right now. Should all be very, very bullish for risk trades. And then last but not least, Bitcoin. Now, yesterday, we had the trading battle with Eightcap, and it was fascinating because I spoke to a lot of the crypto traders, and the crypto analysis was very interesting. You have to go a little bit. Let's go on a longer term time frame. The basic Bitcoin analysis was 35,000, 45,000 range. So the crypto is very, very much in sort of a range-based environment for sure. And there really is no directional trade here. If you want to trade range, you could try it. If you think that pretty much crypto has sold out, that we've had, what is that, a month and a half of 35,000 support. So that's clearly, clearly a good sign. Technically, the longer the longer the trend holds, the stronger the breakout becomes. But the breakout here is certainly not been proven, and there are two ways to trade it. You can kind of buy it here with a relatively modest stop and go out there and hope that that we have a turn and a break back up in risk to the upside, or you could literally just wait until we break the 45,000 and close on that basis. On a near-term basis, if we're looking just sort of on very, very short-term charts here, again, look what I want to show you. So this is an RSI breakout candle, right? Big candle. Typically, your first impulse is to, oh, it's overbought, but it's not. It's coming from from essentially a stationary consolidative level, and that actually tells you that this is an impulse buy. So therefore, buying today on the 1 hour candle at 39,000 was a really good move because you're 1,000 points up from the move, and I still think it's actually quite good here, where we broke the midpoint of the day. If you're looking at on a intraday basis, we broke the midpoint level here from the bottom. That's very bullish, It's a continuation trade for us, and basically showing that risk is very, very bought. Let's take a look at actually risk on all the look at that. Look at this. This is the 1 hour candles on Nasdaq, right? That's uber bullish. This is telling you that RSIs have been overbought all night long. Again, that's not an overbought condition. That's telling you strong trend impulse to the upside on the 1 hour charts. And you actually want to be a buyer in any kind of a pullback here as a trend trade. Same thing I think is going to be, in the Dow here, you actually had a whole series of impulse buys to the upside, and then you have the green candle here, which puts you long into the trade here. So 33,800, probably a decent entry. Maybe it looks quite likely that we could challenge the 34,000 today on a strong move up, especially if the retail sales are strong. Remember, strong economy, high inflation, very positive stocks. It's all ignore the inflationary talk. Look at the consumer demand. Add to that any kind of a collapse in the war trade, if there is some meaningful positive progress made, especially if oil starts to really give way, if people start liquidating oil at 94, 95s. Right now Russia is prevented from selling anything, is selling all of its oil on the open market, even though there are no barriers, like there's no official barriers. Just basically what's happened is everybody has backed off from buying Russian oil. What can happen is if we have some kind of a ceasefire, every global actor that wants oil but has been afraid of just even touching Russia may be willing to step up to the plate. And Russia, of course, is desperate to dump it. I think you're going to see huge amounts of dumping at that point. Maybe $20 under the market price. So to me, the pressure here to the downside could be quite interesting. So that's essentially the markets as they stand. It's a risk-on day. The war trade is modestly bid, but vulnerable to the downside, to the headline risk. And the big headline risk today, of course, as it has been for the last couple of weeks, is Fed, especially Fed today, and any kind of progress in Ukraine. And to me, as I said, the most interesting thing for us to watch today is how will Nasdaq react to let's say, a hawkish Fed statement. If it does a knee-jerk reaction down and then starts to rally back up, that's a very bullish sign that equities should go higher. So any questions? Post them up here in the question box. Let me see. I don't see any questions. Anybody asking? It sounds like everybody is relatively clear on what needs to be done today. If you'd like to join us, please ask your representative about how to join BK. I'm going to be live trading this today, tomorrow, every single day. We're going to try to bank as many pips as we can. Wish you guys best of luck, the best of trading. Boris, Schlossberg, and Kathy for BKForex. We'll see you guys in the markets. Bye-bye.